Hey, what's up guys? Thanks for tuning in and welcome to another weekly crypto market update. As always, I am here with Zero Cool. How are you?
Hello. Just woke from a coma from like 2 weeks ago, and ETH is at like 2,400. Whoa, what happened? What is this? Am I in reality or is this a dream?
Yeah, you were in the hospital last week. Maybe tell us about that.
Yeah, I had an unexpected surgery last week, Monday, I think. Kidney stone. I had kidney stones before, but apparently this was like, you'll have to get a surgery to get it removed. They rushed me. They rushed me into surgery, I guess, because surgery is normally something you plan months in ahead. This was like, go to this hospital and they'll take you on at the end of the day. I went the surgery went fine. It was a little daunting to lay there on the operation table with everything like sterile and lights in your eyes and everything is like gray and white. Very surreal for the first time, honestly, because it was my first surgery. But other than that, surgery went good. Recovery is going okay-ish. No more pain, no more discomfort is probably the most important part. Okay. Back to the charts.
Yes, well, today we'll talk about, as always, macro to understand Bitcoin's price movements, and then afterwards, TA with Zero Cool. So let's dive right into it. I don't know if you guys saw it. I just saw it this morning, actually. There was a downgrade in the United States credit rating for the first time in history, which is crazy. And the reason is, well, it's always this, and we talk about this on this stream week after week. It's the unsustainable path for the US federal debt and its resulting interest burden. And that's just the reason why this happened. And if you look at Bitcoin's price, if you look at the after hours, the stock market dropped on this. So I'm going to spoil it a little bit. I'm a little bit bearish. So I'm starting to get bearish, and it will get more clear and clear the further on we go into the stream. But actually this week I sold a little bit of my portfolio, and I'm thinking of selling it a little bit more down the line. So next up, we have, of course, everyone saw it. Donald Trump was in Qatar. Even the Burj Khalifa was with the United States flag. But they secured a deal. And that's also one of the things that's making me a little bit bearish, because of course, these deals will come to an end. There will get a point where there will be no more deals to be made, and that there is no forward-looking good thing that the market can hope on. And I think that will be the point where the market is gonna go down a little bit because of all the problems, of course, like the debt wall and yeah. So that's one thing. Second thing, week after week, I tell you, this is the most important thing. It's the global liquidity. And for the first time in a couple of weeks, actually, global liquidity went down. So global liquidity went down by $707 billion last week. And at the moment, it's sitting at $177.9 trillion. This is basically because of the central bank liquidity that's not moving upwards. As we all know, the US is still in QT. And of course, the dollar, which has been moving upwards. So this is not good. If this trend continues, we know Bitcoin follows 13 weeks afterwards, and the price will go down a little bit. The good thing, however, is that Michael Howell thinks the cycle will still move a little bit higher, but later in the year. So this aligns perfectly with what I'm planning to do. So I'm planning to sell a little bit of my portfolio in the summer to reallocate Q4, because I think Q4 this year and Q1 next year, we will see a final bump in the market for this cycle.
Fireworks.
Then, of course, the big question mark is the interest rates. And apparently, so I only saw this when I was preparing for the stream, the odds have changed enormously. So at the moment, there is a 90% chance that there will be no rate cut in June, no rate cut in July. So these are the summer months. So if we won't get a cut in the summer months, this aligns perfectly with my plan to be out of the markets during the summer and reallocate in end of September.
Sell in May and walk away.
Yeah, and I'm gonna talk a little bit about it later, because I did a bit of research on it. I will explain it more in depth on Monday or Tuesday. I will film a small video about it. So let's talk about it a bit further down the line. So what I wanted to say about interest rates, it's super remarkable because I already thought it, but it's getting more clear to me that Powell is playing a political game, because I think he's just not cutting interest rates because he doesn't like Trump, or I don't know.
They should have cut in May, honestly. Like last week or it was, I think. They should have cut in last week, and now they're predicting no cut for next meeting as well, which is what?
Yeah. And the thing even is, this was 2 days ago. The April PPI went down enormously, and they didn't expect that. So they expected it to be way higher due to tariffs, but it was actually super low. And that was one of the things I wrote in my What Inflation Will Tariffs Bring article. I said that the producers were going to take the hit and going to take the hit on the tariffs. Yeah, for those who do not know it, so the PPI stands for Producer Price Index, and that's basically just to measure the wholesale inflation. So looking at inflation, so by looking at true inflation, normally Powell should be cutting the rates here. Europe is cutting the rates. Everywhere in the world they are cutting the interest rates, just not Powell. And he's saying that it's because of the uncertainty that the tariffs will bring, the uncertainty about the inflation the tariffs will bring. But we're just looking at the numbers. There is no inflation that the tariffs are bringing at the moment. So, okay, we cannot know it for sure, but I think it's just a political game he's playing.
I agree. But hey, what can you do? I know Canada is cutting hard, which is good, because I want to step into the real estate market. The more they cut, the cheaper my mortgage will be.
But the more expensive houses will get, so you need to front run that a little bit.
Yes, but I think there will be a huge... This is a completely off topic, not relating to Bitcoin or global liquidity or macro, but the mortgage renewals are up for the houses that got mortgages in 2020 and 2021. And if you remember, interest rates were almost at zero, or at zero then. So mortgage interests back then would be 1.5%, 2%, 2.5%. They're 4.5% and up right now. So after 5 years, if you don't have like a fixed income mortgage rates, they need to be renewed between basically now and end of 2026, which means an increase in your mortgage payments. The economy is hurting hard, meaning people will default on their mortgage, and the house market will be flooded with people with houses because people cannot keep up with their mortgages.
Yeah,
and that's when I try to step in and buy a house. No,
buy the whole market.
Buy the whole street. The one rule about real estate is you cannot time the market. And I'm here like, I'm gonna time the market.
No, I actually don't agree with this, because I think real estate is super easy to time the markets, because the market is super slow. It's not super liquid as crypto is, because in crypto timing is actually way harder, because that's reacting immediately. The real estate market doesn't react immediately to global liquidity, to interest rates. So you actually have an edge if you see interest rates going down. So you can buy at the low interest rates. But the market isn't reacting as fast as you. Same inversely, if you see you can use it to sell as well. So I think it's easy to play actually. But anyway, going further, so and that's what I wanted to say: the sell in May and go away. So I've made a chart in Python a couple of days ago where I made two strategies. So one strategy is where you sell in May and go away, so buy back in October the 1st. A second strategy, because actually May is a very good month for Bitcoin. You can see this historically. Here, May is actually a very good month. On average, it does plus 8%. So then I made a second strategy, sell in June and buy in October. And this strategy is almost better than buy and hold. Why isn't it better? Obviously, because Bitcoin saw enormous rise over all the years. So eventually, the June, July, August, and October, even though they weren't good months for Bitcoin, they're still up because Bitcoin in general went just up these last, 13, 15 years? 16 years already.
Wow. It's been a while since Bitcoin's been out. Yeah.
So that's but I still think it has some merit, the selling way and go away, but I'm gonna do it in June. So I'm gonna do sell in June and go away and buy back at the end of September. So that's what I'm planning to do. And usually it works. I actually did it another strategy. I don't have it open at the moment, but with some other closes. The buy in June and the sell in June and buy in October actually outperformed the buy and hold. So
based on because this is a 11-year time scale you're showing, I believe.
This is from 2014 and it's
so 11 years,
with daily prices.
Okay. So yeah, if you shorten the range, say example 2020 to 2025, sell in June and buy October would probably outperform, I think, yeah.
I left it out on purpose because the data before 2014 is super volatile that I don't think it's useful anymore.
No, that's fair. No, that's fair. Crypto only started to pick up in like 2017, right? Like that first rise to $1,000 that we see there. That's when it became quote unquote more an commodity than your thing you could buy on Mt. Gox to pay magic cards with.
Yep. That's when I entered here.
Yeah, so I was earlier.
You were here.
I didn't see the peak, the first peak from like 100 to was it 300-400 and then back down.
It's this one, but you just don't see it because it's not. Okay, so moving on. So this was if you want to know more about the sell in June and go away, I'll make an extensive video about this Tuesday probably. Moving on. Coinbase to become the first crypto firm to join the S&P 500. So this was big news. I think, what was it? Coinbase went up 25% or something the next day. It was crazy. So this is very, very big news because this just means that every asset management firm that has allocation to the S&P 500 needs to buy Coinbase stock. What was it? I posted in Discord. It was a couple of billions that people were forced to buy or something. I don't remember it anymore.
10 billion, I think. It was like 0.1% of the entire S&P 500. And it would be like, I don't know, two months worth of volume that they need to buy in a short amount of time.
But then, 2 days ago, Coinbase got hacked. So, and on that news, it went down again 7%. So Coinbase was hacked. The ransom, so the hackers...
Wasn't really hacked. It wasn't really a hack. It was they
flipped, data leak.
They flipped support agents. So if you go to Coinbase and you have a problem, you talk to a support person. One of the support persons was like flipped and started to leak info to the hackers, quote unquote, the bad actors. And it wasn't really a hack. It's a big difference. Apparently,
a lot of people lost money because of this and they were tricked, and it's ranging from 180 million to 400 million. So this is crazy, but Coinbase will reimburse them all. I think it's a minor inconvenience. It's not that big as the Bybit hack.
But this wasn't a hack. Bybit was legit hacked into and extracted. Here it was information about their customers was obtained, not by hacking, by social engineering. Big difference. Social engineering is a form of hacking, side note. And then they tricked people into giving them access to their crypto. And I think it was by they were contacted by fake Coinbase support. They were said, hey, there's weird activity on your account. We're going to set up a new account with you. And they set up the passkey or the key phrase for them. They sent them, hey, use this address. This is the key phrase. People did it. They sent money to the new new wallet, but the fake support engineer had the key phrase, so they could just extract the money that was transferred into. That's why the amount's so high. It wasn't hacked. It's a big difference between being hacked and being social engineers. They're both bad, but being hacked is multiple worse. It means your security is actually not okay.
And so looking at my screen, what does this mean? Does this just mean only 1% of Coinbase users got their information leaked, or is the information of every Coinbase user leaked? No, only 1%.
1% of the Coinbase. It's Coinbase International, I think. It's still bad. I'm not downplaying this because I own a shitload of Coinbase stock. It is still bad, but it's not as bad as Bybit getting hacked.
Is it minus 7% bad? I don't think they deserve minus 7%, but we'll see.
I think the stock's still undervalued, and this can go easily ×2 or ×3. So they're going to shrug it off. They're going to reimburse the customers, but customer support in general with Coinbase is really bad.
Awful.
And I don't know if you saw the meme with their charts. With the 4-hour ticker on their chart.
No.
So Coinbase Exchange tweeted, "Hey guys, we got a new feature, and it's the 4-hour charts on Coinbase." And people are just dunking them because like a 4-hour chart on TradingView has been there for I don't know 5,000 years, so to speak. And they're like, "Hey, look at this new feature that we should have had since day one, but didn't, and are now pouting about the fact that we have something that everybody should have." And everybody's like, "Hey, this is a company joining the S&P 500, and they didn't have a 4-hour chart. They still don't have a weekly and a monthly, by the way."
What?
Yeah.
Doesn't almost every exchange is just integrated TradingView in their exchange?
And they probably have as well. I don't know. Maybe they're making something on their own. Who knows?
Okay. So next, the only thing that I wanted to say is, you guys know I'm always bullish because the stablecoins are moving upwards. But this last few weeks, well, actually these last 2-3 weeks, stablecoins didn't really move upwards. And that's also the thing that I said. Then I will start to be cautious when there will be a top formation on stablecoins. Then I'll be super cautious. So that's also one of the added reasons I'm cautious and I'm taking some off the table. And that's it for me. So I'm gonna leave the mic to you, and you can start your TA. Just maybe a small shout out. So we have Trader John Wick in the chat. He says hola. So welcome, my friends.
Hola. Yes. Let me know when you're on my screen.
Yeah, you can go.
All right. So guys, you won't believe it. We were trading in a range from December or November until like February. We left the range. We are back in the range. I'm not going to lie. I was giga bearish here, aiming for 65, 85 with a stop over here. It didn't run my stop, but it got very close. I was too bearish, I guess. I didn't expect this flawless move up here. I was expecting that this area would be like a super giga resistance.
Did you rewatch last week's stream?
I have not yet. I am sorry.
Because
you were dunking on me.
Yeah, I said at the end, Zirko, you're too bearish.
It's true. I'm still bearish, honestly. Several reasons. We'll go to the dollar index quickly. Never mind the 2-year painting. Let's focus on this part here. This is the dollar regaining some strength, right? And if we zoom out, oh, sorry, a beautiful painting that I'll never clean up. Next levels to look at is this and this. Still has some ways to go, right? Kind of looks like it's rejecting here and go down. We also have a legal sell in May and walk away from 2 years ago, or 3 years ago even. But yeah, dollar bounced a bit. That's probably why Bitcoin is stalling. And then if you look at S&P 500, again, here on this support and resistance area is where I was bearish, and look at it now. It's sliced through it, right? I was thinking a little deviation like this with your RSI being like this, but no, it kept going up. I would have expected it to roll over, honestly. Maybe it's a little fake out and it still rolls over. Who knows? We'll see. But yeah, impressive strength, right? If the strength continues, 6,900 meme. Here we come. Is that the next target? We can easily. We've done this before, and I nailed almost the Pico bottom with the Fibonacci's. Let's do it again. Let's see where this goes.
69,420.
Yeah, 69,420. So it's just 69 something 7 or something. So yeah, that's probably the next target if we do reclaim all-time high. But how do we get there? What's like the catalyst for the next push past all-time high on stocks? I don't really see one, because the trade war that's going on, the deals, the tariffs, it's all coming to an end. There's been good progress from Trump with China, with England. There's still some major players left, like India and Europe, I guess. But
the only thing would be more liquidity, but I don't see Powell doing anything, so that's why I'm going to take some off the table.
Mm-hmm. I am pretty bullish on stocks in general, but kind of need to be cautious with that, right? Because does this have? We've been up how much percent? 23% on the stocks bounce is pretty hard. Now we might be asking, why are we looking at the S&P 500? We're here for crypto. This is purely driven by S&P 500 strength, right?
Moment.
If you overlap, this is a cool feature on the TradingView. So you go to the plus in the top left corner, you can overlap another charts, and then you new price scale. So the red line is the stock market, and the candles is Bitcoin. You see like the Pico bottom here is the Pico bottom here, and then straight line up. So you're basically trading S&P 500, whether you like it or not. It's not one-on-one the same, but anyone with a little bit of imagination can see that this is almost a copy-paste in movement, right? So for me, I know a lot of traders, like Trader George, doesn't look at S&P 500 ever. I do make decisions on like a higher time frame to look where it could be heading, because I don't know where it's heading. I'm just predicting like anyone else in the market. For me, it's a clone. It's always been a clone recently. Last year, you can like see this underperformance, like this giga range we had. We did not have this range in the S&P, right? S&P went, and this was lagging. So it's not always a one-on-one clone, but it is here. It's definitely correlated. And I'm afraid if stocks start to stall and tumble over, we're gonna go back into a roll over. This is starting to look like a diamond, actually, like a diamond top. I wouldn't be surprised that we test sub 100. Probably not in this weekend. We cannot forget the last 2 weeks there's been a lot of buying, but that new company that's been buying 500 million. There was some
1 billion. I saw another company.
Saudi Arabia have also been swapping the hell out of Bitcoin. Sailor also bought. But when that buying stops, ETFs are not going to be able to keep this up, I think. So yeah, for me, very short TLDR, play the range, right? This is a range for me. This is a range for me. And then if we slap on the time indicators, monthly, weekly, yearly, if we do ever get a close below the yearly, for me, this is one giant deviation, and I am aiming 65,000 still. If we get there. For all we know, we just range this here this summer and then go to Valhalla. Absolutely possible. But if I start seeing higher time frame closes under the yearly, you can bet I'm going to bet the house on this. And it's not the best R&R, but I feel you can do this with size. times 2, times 3 your entire portfolio. You'll take like a 60% or 45% hit if you're wrong. But I'm fairly confident if we close under the yearly, there's no way this should be retested, right? There's liquidity here, obviously, because it's up only. Just like here, up only. We've had that before. Like this here is also up only, but with the premises that we had like months of range. This is only up only in the range here, so it's not as long as previously. So yeah, super bearish scenario for me is close below yearly open and then started building a position targeting 65. Bullish being we range this summer, right? Range like this, maybe a quick test of the yearly open. That would be ideal, I think. You kind of need to is a big word, but we're clearly in an upwards momentum unless that is broken and we start closing under the yearly. A tap of the yearly is a great area to bid, right? I think anything between 95 and 92.5, here it is. It's a perfect area to play some sting bids with whatever appetite you have. Aim for the first range, second range high, and play it like that. This is where I'll be bidding, and if we lose it, because it's perfectly possible to do like rollover, cut early and start building a short once we're below the yearly open. And it's summer. Summer's always less volatile. Why? Because people who run the stock markets, the asset firms, the hedge funds, they all go on vacation for weeks and weeks on ends. And when they come back? August, October, and then into October, end of September, their positions for the winter. And that's it for me for Bitcoin. We either range for the summer, or we break down the yearly open, or we break down below the yearly open, and then we're going deep.
I'm happy for the first time, I think, in a long time this stream, we're almost thinking the same, so that we're going to range for this summer, a bit of a slow summer. So let's hope we're both correct. And for me, it's fine to just do our predictions and end the stream here. It's been a good one.
Yep, I do want to see one thing. I always say, like, when you look at a chart, you should instantly see something you like or see a pattern. When I draw this squiggly, what I see is like in giant head and shoulders.
Yeah,
but
inverse.
Inverse head and shoulders. But okay, yeah, this needs to print over the summer, and then we need to chill around, I don't know.
What measures that? Wait.
Oh, that would be a lot. Let's see. Yeah, $30,000. That would put us into 150-ish. Because you need to measure percentage, not price, I think. That would put us between 140, 150,000. Which is also give or take to your cycle top, I think.
Almost, yeah. It depends at the moment. It depends how much liquidity there will be, but I'm thinking 150K.
Mm-hmm.
Yeah. Okay. Interesting.
One more question. One more thesis to throw at you. Let's say we chop this summer. What does stock like Coinbase do? Because Coinbase is very correlated with Ethereum, I think.
Yeah, it's
with Total too.
Yeah, it's super easy. That's just the thing at the moment. Well, it's correlated with crypto and Bitcoin, of course. But if you look at the correlations, it's mostly correlated with the altcoin market. So if you want to know where Coinbase will be, you need to know how the altcoin market will react. I made a big, extensive video about it. And at the moment, it's not time for alt season yet. But I'm pretty sure it will still be there, and I think it will come Q4. So I think that will be the time when Coinbase stock will move up as well. So I think Coinbase stock in the summer will do next nothing, or just follow the S&P, and the S&P usually does sell in May and go away. But spoiler for the Monday video, not after an election year. So in the year the election was. So normally not this year. So we'll see.
We've said it before, right? The election year is pretty much up only after the election. Maybe not this time because Trump really nuked the market, but maybe the up only has started because, again, I've shown it. We bounced, what was it, 23% from the April nuke where everybody was giga bearish. 20% bounce on stocks is not bad in general. But okay, let's put some predictions on the charts and call it a day.
It's time that you take the win. Oh, so yeah, I added the score already last week. Honestly, for me, it's the same. I think we'll be here next week. A little bit bearish, but not giga bearish.
It's always so hard, right? Because it's next week Saturday. Because I think we're gonna go down, but for all we know, we like wick to 98,000 and go back up to 100. So I'm gonna throw me on the key June, the blue one, a 10 probably.
Ooh, above me.
Yes.
It has been a while.
Yes. Look, it's go to fucking 65,000 straight in one line from here. Now, I think levels to look at is like 95 to 92, and below that, I don't know, 75 and 65. Let's see. I flip bullish at the top, guys. Just use me as a counter indicator. I'll post my address in the comments. You can thank me later. No, I'm just kidding. Cautiously, I wouldn't even say our prices are bearish. We're just consolidating. If we break below yearly open, which is 92.6, we have a market structure break, and then we're already back into our daily clouds.
If I'm being honest, we're trading near the top, but to me, we really don't have the strength to break the all-time high at the moment. So why shouldn't you take some profits here? I know, that's just my opinion.
True, and you don't need to like full sell your entire stack. Sell a little, sell 5%, sell 10%. And if you really feel giga ultra bullish and we take all-time high, buy back and sell higher, right? Buy high, sell higher is also a tactic.
All right. That was a good one to end on. Good advice. Okay, guys, I hope you enjoyed it. Zero Cool, thank you very much for coming on. I'm glad you're doing better. So if you like the stream, please like. If you're new to the channel, subscribe, and then we see you all next week. Bye, guys.
Bye-bye.